RJ Baxter here, Fairway Mortgage, with your tip of the week. I wanted to talk this week a little bit about why mortgage rates went up. You've probably seen that the market's been super volatile. So just like the stock market, interest rates have been also volatile, and the bonds that back interest rates. When the Fed cut rates to zero on Sunday, that isn't the same thing as the mortgage rate. I've talked about that on other videos. The Fed rate is not the same thing as mortgage rates, and mortgage rates did not go down because of the Fed rate cut. The reason why we've seen an increase in rates is because of all this government stimulus that's been going on. When the government does stimulus programs like this, they have to pay for it somewhere. And the way they pay for it is they issue more government debt in the form of treasuries. And when they issue more treasuries and bonds, they back mortgages. When there's more supply, when more supply hits the market, then the prices of that supply has to come down. It's just basic supply and demand. More supply, the same demand, the prices go down. And as prices go down, yields go up. I've included a link here to a great article on Market Watch that explains a little bit more about how this works. But as those prices of bonds go up, mortgage rates also go up. So we've seen this in the short term as the government has issued debt at a high rate. I think the most recent stimulus package was $1 trillion, something like that. That's a lot of treasuries that have to be absorbed by the market. But once that passes, assuming there's not another gigantic $1 trillion stimulus package, it seems likely that rates will go back down. Now, whether that's days, weeks, months, we just don't know. But in a poor economy, interest rates tend to go down. And we will see if it plays out that way. But once the supply is not as heavy as it is right now, it's likely that investors will be continuing to buy bonds and treasuries, which then leads to lower rates. So if you have any questions about that, or if you're refinancing or someone you know is refinancing and they were not able to take advantage of the low rates we saw a couple weeks ago, our advice is to get your application in so that we're ready to lock, so that we can take advantage of rates when they go back down, because it's no guarantees, but it's likely that it could happen here in the not too distant future. So give me a call if you have any questions on that. My name is RJ Baxter, Fairway Independent Mortgage. Have a great rest of your day. Thanks for watching.